Okay, let's talk about the US stock market because right now it is at a fascinating crossroads. On one hand, we're seeing these absolutely incredible, record breaking highs, a rally that honestly feels unstoppable. But if you listen closely, those whispers of a bubble are getting a whole lot louder. So, what's the real story? Is this the golden age of an AI boom, or are we teetering on the edge of some serious trouble? Let's dig in.
First off, just look at this number, 6,800. The S&P 500 hasn't just been climbing, it has been absolutely smashing through old records. Analysts are calling this the golden rally, and you can see why. The market is just roaring. But the big question is, what's actually powering this thing?
And it's not just a one-trick pony. This rally is broad. You've got the tech-heavy Nasdaq, the industrial Dow, even the Russell 2000, which tracks smaller companies. They are all pushing into record territory. It really feels like this powerful wave is lifting every single boat in the harbor. But can it last?
To figure that out, here's how we're going to break it all down today. First, we'll look at the golden rally itself, the perfect story that everyone wants to believe. Then, we're going to peel back the layers and look at the cracks forming just beneath the surface. After that, we'll map out three very different paths the market could take from here. And finally, we'll land on a final verdict.
So, let's start with the good stuff. What's the narrative that's fueling all this optimism? What's making investors feel so confident right now?
Well, it really boils down to this one beautiful idea. No recession, rate cut. The story is just perfect. The latest inflation data, the September CPI, came in cooler than anyone expected at just 3.0%. And that has the market convinced the Federal Reserve can finally start cutting interest rates. So you get this magical scenario. The economy stays strong, but money gets cheaper. For stocks, that is pure rocket fuel.
But whenever a story sounds that perfect, you have to wonder. And if you pop the hood on this market, you start to see that the engine is making some really strange noises. It's like the market has two completely different minds right now. On one side, you have the real, tangible economy. You've got companies like General Motors, Coca-Cola, 3M. All of them are posting just fantastic, blockbuster earnings. GM is literally saying, hey, we're selling a ton of trucks and SUVs. This is real-world strength, people buying actual stuff. And then, on the complete other side of the argument, you have this. David Herr, a really respected chief investment officer, comes out and says the massive spending we're seeing on AI, well, it's showing bubble behavior. He's directly comparing it to the telecom mania that happened right before the dot-com bust in 2000. And trust me, he is not the only one saying this. And this is the crucial point. You have this massive divide. On the left, you've got real profits today, solid companies, and strong Black Friday sales that show people are still out there spending money. But on the right, you have what feels like a speculative frenzy, where more than half of all professional fund managers are calling the AI boom the #1 risk to the entire market. They're warning that stock prices might be totally disconnected from reality.
Now, to really see this tug of war in action, let's just look at 5 key movers in the market right now. Each one of these tells a very different and very important part of this whole conflicting story. I mean, just look at the contrast here. It's wild. You've got General Motors, a pillar of the old economy, surging 15% because of great earnings. Then you have Beyond Meat, which is a highly speculative stock, exploding up 146%. And at the very same time, gold, which is supposed to be your ultimate safe place to hide, is getting hammered, down 5%. It's like solid earnings, crazy speculation, and chaos in the safe havens are all happening at once.
So how in the world does a stock like Beyond Meat jump 146%? It's a textbook short squeeze. A staggering 63% of its available stock was being shorted. That means tons of traders were betting the price would go down. But when some good news hit, the price started to rise, and all those traders were forced to buy back the stock to stop their losses, which just launched the price into the stratosphere. It is a sign of extreme speculation in the market.
So given this deep conflict, this split personality, where do we go from here? We are truly at a crossroads, and depending on how this whole thing resolves, I see 3 very distinct paths forward for investors.
All right, path number 1 is basically to lean into the hype. The strategy is to stick with the winners, the AI leaders like NVIDIA, the big tech names like Apple. The logic is pretty simple. The AI revolution is a real long-term trend, and lower interest rates are only going to help these companies grow. The risk? Well, it's pretty obvious. What if this really is a bubble and it's about to pop? Okay, path number 2 is what's called a rotation. The idea here is to start moving your money out of that expensive tech and into the sectors that have been kind of left behind, like industrials or financials. The thinking is that as the economy recovers more broadly, these undervalued stocks will get their time in the sun. The risk, though, is that if we get a surprise recession, a hard landing, those are the exact companies that would get hit the hardest.
And then there's path number 3, playing defense. The strategy here is to forget the crazy swings and increase your position in safe haven assets, like gold. This is your hedge against a big market correction or some kind of geopolitical shock. Of course, the risk here is that if the party keeps going and the rally continues, you're pretty much left on the sidelines watching everyone else have fun.
So let's put it all together. We've seen the rally, we've seen the cracks, we've seen the possible paths forward. What's the final verdict here? What are the key things that you absolutely have to be watching right now? Okay, key risk number 1, without a doubt, is the AI bubble. Look, when 54% of professional money managers say this is their single biggest fear, you have to sit up and pay attention. Valuations for some of these companies are now stretched beyond even what we saw back in the dot-com peak. If this thing pops, it could drag the whole market down with it. The second huge risk is geopolitics, and specifically the relationship between the US and China. This is like a constant low hum of anxiety in the background. Any new tariffs, any supply chain problems, any breakdown in talks, any of that could stop this rally dead in its tracks, no matter what the Federal Reserve is doing. And this right here perfectly sums up the core conflict. Let's start with the single most positive thing you can say. The US economy is just remarkably resilient. You've got strong profits and cooling inflation. It's a textbook Goldilocks environment. But the single most negative takeaway is the crazy speculative fever. The mania in stocks like Beyond Meat and those constant bubble warnings, they are classic signs of a fragile, late-stage market that could be getting close to a peak. Which leaves us with one final, huge question. You can think of the market as a car running on 2 engines right now. One is the promise of AI in the future, and the other is real-world profits today. The question is, which one of those engines is going to run out of gas first? The answer to that is going to define everything for investors in the months ahead.